Hey everyone, this is John Feneck with the Feneck Commodities Report. And with me today is my podcast partner, Don Durrett, founder of goldstockdata.com. Don, how are you today?
Really good. Pretty exciting day. Monday the 12th, gold is up $100 in futures, almost $100 in spot. Pretty amazing day. Silver up $5.
Yeah, just you called it, man. When we broke 50, you said there would be days like this where we go up in chunks. And I do remember that comment a number of months ago. And we're seeing some extremely good price action in our sector. We're interviewing in about 8 to 10 minutes Western Exploration today, and we'll have Darcy Marud, the CEO, on with us in just about 8 to 10 minutes. Um, I like that story. I love U.S. stories, as you know, Don, and the chart has seems to be right at support right now. So I think it's a really good entry point versus the peer group. So we'll hear from him in just a little bit. But first, I wanted to touch on what happened over the last couple of days. You know, you and I talked about Venezuela. We never really talked too much about Greenland because I don't think it drives market action. But now you've got Iran threatening the U.S. literally I mean, the headlines on CNN and CNBC today were literally war. And now you've got the Fed uh, with criminal investigation, right, with criminal charges here against Jerome Powell and the Fed. And it's just hard to put all this in context for the average client. So, what do you make of all of this stuff?
That's a big question. I mean, we could talk about that for an hour, right? It's hard to condense down, but the bottom line is this. Heading into this year, I don't think gold had a stronger fundamental backdrop. So the political uncertainty just adds to the economic uncertainty. And the
Right.
economic uncertainty was already the reason this thing has really been driving. And the economic uncertainty is that the global international trade situation has been in place since 1945, is basically breaking down. And the odd man out is the US, because the US was the dominant player in that. The US set all the rules. The SWIFT system used US dollars. The SWIFT system was what the entire world used, and that's all breaking down. So I think the breakdown of the SWIFT system is the reason why gold basically went from 2,000 to 3,000, 3,000 to 4,000, not 4,000 to 5,000. This is economic. This is an economic, earthquake. And Wall Street seems to be ignoring it, seems to be pretending that the US is still the dominant player. It's not. New York City right now is the dominant, you know, marketplace, financial markets. But guess what? Japan was in 1989, right? And when a country gets, it doesn't matter how much value you get, to maintain it, you have to maintain your position. And Japan lost its position. Their stock market crashed from like 45,000 down to like what, 15, 12. And now the US is in that similar situation where we're overloaded, we're overweight with over 60% of the global. Japan was 50%, we're like 60. So that's kind of a backdrop. It's a combination of both economic uncertainty of the US economy and now we're having this political uncertainty, which is increasing. I expected this. I actually think that I thought it was going to happen in the window of 25 to 27. I thought it could begin in 25. This window of 25 to 27 that I was expecting is the end of US global hegemony, the end of US global dominance. I think that this is it. 26 is it because of the midterms. I think the Republicans are going to lose the midterms. I don't know when the US economy, when the stock market's going to crash, when it's going to stop going higher. I think it'll stop going higher before the midterms and then crash after the midterms, but it could crash before. But this year is setting up to be really ugly, I think, for the economy. Very, very strong for gold and silver. I flipped. I mean, the silver price has been absolutely on fire. And I thought, maybe 80 would hold here in February and then maybe we get a correction in March. But after watching it go out the gate, and we had that one Sunday night, 2 Sunday nights ago, we had gold go down 200 and silver got whacked. After, Christmas, where silver went all the way to 85 and then it went all the way down to 70. And then it turned around and just rebounded back up last week. And I said, whoa. And it went up 10% last week from 70 to 77. It ended the year at 70. And then today it's up another It's up $5 to 85. So it's up 20, silver is up 20% in 2 weeks. Your turn.
Yeah, yeah. Hard to follow that commentary. Yeah, I think silver remains our largest position. We still haven't sold a single ounce of physical silver. I am starting to sell a little bit on silver equities because I think they got a little bit ahead of themselves. But I think gold looks like just like you had said so many times, Don. Gold is leading and silver is following. And then you look at the rest of the commodities complex, and it gets really interesting. We've talked about tungsten breaking out to all-time highs. Copper is breaking out simultaneously, CPER. Then you have palladium and platinum, PALL and PPLT, also breaking out to test new highs today. This is all happening in concert with each other, and that was unexpected by most investors. You've had gold leading for so long, and now silver has caught up literally in a couple of months. And now the other ones are starting to break out around it. And we haven't even talked critical minerals. We don't have time to, but a lot of these things like tungsten, antimony, I mean, I really think that there's tremendous value in critical minerals right now because the US China thing is just not going to hold up. It's not going to hold up. I mean, if you look at if you talk to CEOs like I have in critical minerals, they're all saying the same thing that this thing is just it's just for optics, this agreement, so to speak, between the US and China that was constructed in November.
So people need to get the story straight. Gold and the S&P have been correlated since February 24. And the S&P has been stronger than gold in volatility wise. The S&P hasn't corrected very much. We've had very few, 5% correction is the S&P overall. So whenever gold is corrected, gold corrected in October and the S&P didn't. But gold didn't, but every time, that's just one example. But anytime gold goes down, as long as S&P trends higher, gold just goes, oh, I see you. Here I come. It just comes ripping back. So they've been correlated. But the key here for this move in gold and silver has been the S&P 500. Gold's basically saying, look, I'm the leader here. I'm telling the truth. You're not. And so every time it goes up, gold says, fine, I'll come with you. I'll come with you, but you're lying. And silver is following gold. And now once silver got above $35, before it got above 35, it got stuck at 30, got stuck at 35 for a little while. It got stuck at 30 for a long time. And then got stuck at 35. Those were both the periods when silver was trying to convert into a monetary metal. Once it got above 35, it ripped to 50 in less than 90 days. And that was the conversion from investors kind of being on the sidelines, silver being a base metal, industrial metal, to now playing that other role of monetary metal. And that's why silver is going absolutely bonkers above 50, because now it's a monetary metal. Now people want to own it. Central banks are probably buying silver now. Silver's become a monetary metal. We always knew it was going to happen. It always does. But the key here is the S&P. The S&P, I've been saying this for months and months and months. The S&P is the most important chart for gold because the S&P is a corollary to uncertainty. And so S&P is basically, like I said, it keeps going higher, but gold just says, oh, fine, I'll just follow you. But simultaneous to that, at a certain point, the S&P is going to stop going up. And once it starts going up, that's what we're waiting for. That's going to be the fear trade. The thing is absolutely bonkers is we have gold and silver. We have the HUI almost at 800. HUI is at 790. It was up 28 points, 790. So the all-time high was going into this year was 630. So it's 790, and we've achieved that without a fear trade, which is unbelievable. In other words, it's a Momo trade. It's a momentum trade. People are buying gold and silver miners because the momentum, gold and silver are going up. Okay, I'm going to buy them. They're not buying them for fear, except for a few people that see the fear coming, but they're not buying it for fear because we don't have a fear trade yet. A fear trade is when people do not want to own the S&P 500. That's a fear trade. Like, I'm not touching that. It's coming out of the
Yeah.
1930s. You go into the 1940s, like, I'm not going to own those stocks. And you had a wall of worry from 1945 all the way until 1980 before that fear trade really ended. It didn't really end until 1982.
Yeah. Well, we did see the futures on the QQQ, the Nasdaq, and the SPY, the S&P this morning down, for a number of hours pre-market in response to what happened with the Fed. So, I mean, we're starting to see some people get a little more skittish, which is, I think, positive to your thesis of at some point we're going to not see the S&P and gold go up together. There will be a break in chart action, and I think gold is telling the truth. So with that, let's leave it there and bring on our guest today, Darcy Marud, CEO of Western Exploration, the ticker in the US, WEXPF. And Darcy, welcome to the show.
Thank you. Interesting conversation, gentlemen. Boy, what a way to start the day. $4,600 gold and 85 silver.
Yeah. Yeah.
Yeah.
Welcome, Darcy. It's a really good story you have.
Thank you. Appreciate it.
Yeah,
Good to
Darcy,
be
would
here.
you be kind enough to give us maybe a 7 to 8 minute overview? If you want to use some slides, you can.
Yeah, no, I'd be privileged to do that, and I think we've got a very good story here that I'd like to share with your viewers and your listeners, because one thing that we've seen in the gold space over the last little while is a lot of the operating companies catch the tailwinds of the gold price and the silver price, and then that's translated down to the developers. And I think it's really the junior explorers and the next to be developers that have remained in the dark or in the shade a little bit. And I think it's our time really to blossom. So, maybe it's a good time that we update what we're doing here to your listeners. So, we are a junior miner based in Nevada with an asset in Nevada. It's called the Aura Project, and you can see it on that slide there, just north of Elko, Nevada, which is one of the major mining centers in North America. I'd put it on par with something like, Val-d'Or or Kirkland Lake in Canada, where, mining is part of the legacy of the area, and it's been a big supporter of the local economies for a number of years. We're just north of Jarrett Canyon, about 25 miles that you can see there, and the Big Springs project in blue. So this belt of rocks that we're in has produced and hosted about 15 million ounces of gold over its lifetime. So it's a prolific mining belt, and we're just on the north end of it right now. So we've got, as you can see there in that gold part, an asset called the Aura Project just off of paved highway. We've got water, we've got power, and we've got road access nearby. So, infrastructure-wise, very well located. We're permitted for exploration on our project up until the end of 2029. So a lot of runway to continue to do exploration and add resources. The property is 100% owned by Western Exploration, so no option payments, no joint ventures. We've been active here since the late 90s, and we've accumulated this land position between 1997 and 2017. So very well located again, and of course, we're in an area that is very well known for its mining heritage, which is Nevada. The project itself, you can see there in gold. We've got about 61 square kilometers of claims. That is the access road in the dark gray. We've got 3 different resource areas, which I think is kind of unique with a project of this size. We've got the Doby George oxide deposit to the west, you can see there in blue. The Saddlewood Gulch and Gravel Creek deposits to the east that are there in gold. All told, we've got about 1.5 million gold equivalent ounces, and that's about 1.35 million gold ounces and about 14 million ounces of silver. We've got a discovery cost over the history of this project of about $25 per ounce. So, we do put money into the ground, and we've been very effective at identifying resources and getting those into our 43-101 resource base very quickly. The gold resources we have are expandable, and we're looking to be to 2 million ounces of gold and 30 million ounces of silver by the end of 2027. How, you ask? Well, we've got a high-grade discovery called Gravel Creek. In 2023, we discovered a deposit right next door to Gravel Creek called Jarbidge. And in 2025, we were able to already add that in resource after 18 months of discovery. We added over 200,000 ounces, and again, at $25 per ounce. Those deposits remain open, as you can see here. the Gravel Creek deposit in red, and this is our new discovery called Jarbidge to the right. And again, that's 200 and some thousand ounces that was added within 18 months of discovery. So in our 43-101 that we updated in June of this year, we were able to increase the the inferred gold resource. This is a sulfide resource at Gravel Creek by 56% for gold and over 83% for silver. And that's 18 months of drill work that we did. The indicated category is about 216,000 ounces of gold and 3.4 million ounces of silver, with the inferred being over 500,000 ounces and almost 10 million ounces of silver. So this deposit was discovered by the company, and it continues to grow, and it continues to remain open in every direction, as you can see on that map, where we've got our drill holes at the edges of that deposit are all still open in mineralization. Importantly as well, this resource is done at a 4-meter minimum width. So, the veins can vary from 1.5 meters to 6 meters, but we've diluted everything to 4 meters to give a real good representation of what it would look like in a mining environment. We can recover this. It is sulfide, but the metallurgical work we've done shows that we can recover the gold and the silver to a very high grade, very marketable concentrate. And within Nevada, we know that there's a number of mills and roasters and autoclaves that are buying this type of high grade concentrate. So we think we've found a resource that's expandable. It's still growing. It's very good grade. We've got a process path that's very simplistic and very known, so that it's been in use for a long time. And we've got an environment here in Nevada where we've got the infrastructure in place, not only to develop the project, but also sell a concentrate going forward. So we think we're very well situated with the Gravel Creek deposit for success going forward on both developing that resource and expanding it. Then at our Doby George deposit here, we've done a PEA that we completed in June of this year. We've got about 500,000 ounces in resource. We've completed a open pit crush stack and ADR heap leach recovery project, about 70% heap leach recovery, 7,500 tons a day. It does about 58,000 ounces of recovered gold on a yearly basis. And because of the life of mine grade of just over a gram, it has very high margins to the gold price. You can see at $3,000 gold, it has a margin of about $75 a ton. So when you look at the NPV of the project here, it's about $212 million at $3,000 gold, increasing its spot to over $400 million US. So all of that project is sitting within a company of a current market cap of about 35 to 40 million Canadian. So a lot of opportunity here for value creation as we continue to de-risk Doby George. We've started the permitting process on that, and as we continue to grow the resource at Gravel Creek. So very unique opportunity where we're developing an oxide heap leach deposit and at the same time advancing a resource growth on a newly discovered asset called Gravel Creek. So I hope that wasn't too much in the weeds there, but we're pretty excited about what we're doing. And I think the next 2 years for us are really going to be where we show how we get Gravel Creek into a PEA by the end of 2027 that demonstrates not only one, but 2 economic projects at Aura.
Okay, thank you very much. Can you go back to slide 11, the one that you just had up there, Darcy, if you don't mind?
Of course I can, not a problem. Right there?
Yes. So you had mentioned the leverage that you have to the price of gold, but if you look at the chart of WEXPF right now, it's not showing that leverage. And I realize you go through periods of time when you're not going to have a perfect connection, right, to what's happening with gold price and with your stock. But what do you think? What would you explain to an investor as to what the disconnect is? Because you seem to be trading at a tremendously good valuation here in terms of what Don and I have as an audience, which are value investors. We're looking for cheap gold stocks, right?
Right, right. No, good question, John. And it's one that we grapple with every day. We want to return as much value as we can to our shareholders. And I would say we are disappointed in the share performances of late. And I think the explanation for it is when we came out with the PEA with Doby George back in June, I think we probably confused the market a little bit on the timing of that PEA and what the next steps were. I don't think it was seen as an opportunity that we were taking into permitting immediately. But we've kind of solved for that over the last couple of months where we've engaged with Stantec Consulting and KCA to start that permitting process. So I think in this rising gold environment, it's good to have a deposit, but your shareholders and the investment community really want to see what are the next steps. How do we gain leverage to that gold price? You don't see that leverage if it's sitting in the ground. You really need to have a path going forward of how you create that cash flow value in a high gold price environment. And I think we didn't demonstrate that right out of the gate with the PEA, but I think we've corrected that in November and December of this year by getting Kappes, Cassidy and Associates on board to start the detailed engineering of the project, and Stantec Engineering and Consulting to start the process of the mine plan of operations with the Forest Service. So we've demonstrated now that we are moving this through to permitting. We expect in 2026 a very active season with baseline studies, with detailed engineering, and presenting that mine plan of operation that can lead to a more aggressive permitting in 2027 so that we can look on getting some cash flow from this with a construction starting sometime in 2028.
Okay, that's a good
And,
answer.
and I would add, John, on sorry to interrupt, on Gravel Creek, it's a new discovery. So these new discoveries, take time to really develop and understand. I think we've demonstrated that we can find gold there adjacent the current resource at a very affordable level of $25 per ounce. Again, we took that Jarbidge discovery from a discovery in 2023 and had it into resource by 2025. We anticipate we can continue to do that. So really a new discovery, people want to really see the meat of it, grow over time, because we know discoveries happen all the time, but really the one that turns into a mine are very rare. So the onus is on us right now to demonstrate that our thesis is correct, that we have a deposit here that will continue to grow. And I think the magic number for an underground deposit like we have is a minimum of 1.5 million ounces, where people can envision that there's some real meat on the bone here that holds together. And certainly that's where we want to be by the end of 2027.
Yeah, if I heard you correctly, you're talking about roughly 1.5 million ounces of gold equivalent, but I have down 1.32 basically of actual gold ounces. Is that right?
That's correct. And let me step back. I think, what we're looking at is 2 million ounces of gold and 30 million ounces of silver by the end of 27. That
Okay.
would be 500,000 ounces of gold at Doby George, which we've pretty much got in the bank right now, and 1.5 million ounces of gold and 30 million ounces of silver at Gravel Creek. So at
Okay.
Gravel Creek, the resource right now is about 850,000 ounces of gold and 13 million ounces of silver. So we're a little bit more than halfway to our goal at Gravel Creek.
Okay. And you said Gravel Creek's going to have a PEA in 2027.
That is the goal right now by the end of 2027 to have that PEA. And we've always had a philosophy here that we want the deposit to get to a certain size that economically a PEA would demonstrate a very high quality project. We know, because it's an underground sulfide project, getting it to 1.5 million ounces is kind of where you want to be. Anything less than that, I don't think the economics would present well. So I encourage everybody to watch what we're doing, because I think we're going to be very successful in growing that resource base here over time.
Okay. So one of the things that Don and I look for all the time in these interviews is avoiding a take under, as we saw with Marathon Gold in November of 2023. Someone else benefits from all the work that was done and the time that we spent as shareholders holding a stock like that, right? So what can you talk to the share structure a little bit as to like who owns what, and do you have 25 to 30% of the stock tied up in good hands, please?
I can walk through a slide right there that shows that. Sorry.
Okay.
So, there's our shareholder structure right there on the right. We've got about 53 million shares in market right now, on fully diluted basis, about 72 million. But you can see a very strong institutional shareholding register on the right there on that little round ring. Those institutions are led by Golconda. Golconda is a private equity group out of New York that capitalized the company when it was private. From
Okay.
2013, when we discovered Gravel Creek, until we went public, they invested in excess of $20 million US that resulted in the discovery of Gravel Creek and that first resource estimate that was about 700,000 ounces in 2021. So they're still about 32% of the equity in the company, and that is all held in a closed fund and not trading. Other major institutional investors that we have, US Global, Ralph Aldous, Europac, Adrian Day, TXAU, which is a private equity group out of Houston, Texas, invested in the company back in 2024 and have been very good shareholders of ours, and Conwave and Gold Ventures out of Switzerland. So a very solid institutional shareholder base that are long-term investors in the company, and that accounts for almost half of our equity registry. Agnico Eagle has been a very good supporter of ours since 2017. They've contributed in just about every private placement we've completed. 2024, they contributed. Last year, or 2025, they did not. They took a pass on that one because we were fully funded for our next round. So they said, go ahead and complete that. But they've been on a technical committee with us since 2017 and continue to support the project through technical advisory and also, just support through anything we need for metallurgy, et cetera. So between our institutional investors, Agnico Eagle, and Auramet that you can see there at 4%, which has been in every private placement we've done, we've got some very good long-term shareholders that account for well over 50% of our shareholder base.
Okay, thank you. So if I'm doing the math correctly, if you have 52.6 million out and 32% of the outstanding shares are held in a closed fund, then that leaves 35.77 million shares outstanding. Is that
That's
right?
correct. That's about right.
Okay. Because I mean, obviously, Adrian Day is a longer term investor, Conwave is, et cetera, but like they could sell, right? But I mean, if 32% of the outstanding shares are held in a closed fund, that's amazing.
Yeah.
I mean, this is a really tight share structure.
It is a very tight share structure, and we've tried to address that over the last couple of years, John, by getting a little bit more retail interest in this in our story, and I think we've succeeded in that. But really, what we need to do is properly capitalize the company going forward. I think one of the things that's hurt the way we're valued in the market is we tend to do a raise every year, and I think it's become a little bit predictable for us on when we're raising money. And I think the market looks for those moments when we'll be in market, and that hurts the share price a little bit. So in our next round of financing, I'd look for us to do a very significant financing for the company that would give us good runway for exploration to really develop that plan heading into 2027.
Okay. Thank you for the comments. Don, I'll turn it over to you.
Yeah, I always think that I own everything, and I'm not going to find very many new 10 baggers. Oh, can you bring that back up if you could?
Sorry, I jumped the gun there. Sorry, Don.
Yeah, I always think, and then John finds these 10 baggers and I have to own them. So, I mean, I'm trying to find a red flag with your company and I'm having a real hard time. So the reason I don't own it was because of the size of the project. You're absolutely right. It has to cross a threshold before it gets exciting. And you're right, 1.5 million is kind of my minimum, but I really like to get to 2. And you're saying 2 million plus 30 million ounces of silver in 2027. Well, the gold silver ratio goes 30-1. That takes you to 3 million ounces. So I think that you have a really good chance at 2+ million ounces. So you basically land in my real strong bucket. And then you're in Nevada, which is fantastic. You're expecting to be fully permitted either in 28 or before 28. AISC is very, very strong at $1,200. The CapEx is very low at $115. So just Aura alone, or just Doby alone, at 58,000 ounces a year, at $6,000 gold, your margins are going to be $3,000, around $3,000 margins. At $3,000 margin at 58,000, your free cash flow is about $175 million. At 10 multiple, that's 1.7 billion. You're currently at 32 million fully diluted. That doesn't include Gravel Creek. You add Gravel Creek, you get another billion. Basically takes you to about $3 billion. 2.5 to 3 at $6,000 gold. that's 100, almost 100 bagger. Hate to say that out loud, but you're currently valued at 32 million fully diluted, and you value somewhere around 2.5 to 3 billion just on what you already have. This is a property that's fairly large, about 15,000 acres. I mean, I'm trying to find problems. You don't have permitting issues. You have excellent infrastructure. You have water. You have a grid. You have roads. You have excellent insiders, strong, real strong shareholders. It's going to be really hard for you guys to give this away because as gold prices go up above $5,000 and you start looking at your margins and you start doing the math like I'm doing the math and you start seeing the free cash flow and you go, look, this is Nevada. We're going to get at least a 10 multiple, people.
Right.
You know, somebody on your board is going to figure that out, right? So it's like, hey, we can't sell this. You guys do realize what we got. So really, what this comes down to as far as excitement is the reason why I wanted you to bring this back up. Do you have a Gantt chart that shows your path to production on Doby?
There has not been any past production on Doby. Doby has actually
path to production. Do you have a Gantt chart that shows a path to production on Doby?
We do not have a Gantt chart. We are currently working with the Forest Service to develop that. So we don't want to get ahead of the game here and give some false expectations in the market. So we're working on a Gantt chart right now with the Forest Service that we'll be having, I would say, in the public space in about 2 to 3 weeks, Don.
Okay, that's good. So this is where I get excited. I get passionate. So I've seen companies over and over again that if I see any weakness or I see something that's kind of out of place, you know, it's like it always tends, it's like the cockroach thing. You see something that's out of place, and then before you know it, there's something else, and then something else. The companies that kind of have everything, you know this is a very difficult business, as you know.
Yes, sir.
And so the people that know what they're doing, they don't miss anything. You don't see it because there's, they got smart people in the room and they point it out, right? So the reason why you're valued at $32 million, in my opinion, is because that's a big gap there. When people go and they look at your presentation, I'm just telling you I'm doing this for 20 years.
Yep.
And if you would have had your presentation correct, if you will, I'd be a shareholder already. So you're basically missing, that's really important. That's really important. It's like, so you're going to do it in 3 weeks. You will probably be, once you get that Gantt chart out, you'll probably go to 50 million ounces, $50 million. Now, why is that? Because this is a strange business. I've been watching this for a long time. But it's the little things that matter. In other words, if a company has one little, glitch, if you will, one little problem, people won't touch it. I'm not touching that stuff, right? So when the Gantt chart comes out and you show a path to production, like right now, when you look at this, you look at the presentation, it's good. For instance, you told us today that you should be have a FID. Fully, final decision. I forget what it is. In 28, that you could go into construction in 28. You told us that today, but if you go through this presentation, it doesn't say that. That's huge, right? That's huge. And so now I'm definitely going to buy this stock. Absolutely.
Well, and let's back up, Don. And those are all very good points, and I appreciate that. But I want to back up a little bit to how we've constructed this company. So, the people that are in the company, for example, myself, I was executive vice president of Yamana in previous life before coming here in 2018. Curtis Turner, our CFO, was over at Meridian Gold with me, where he was the controller for El Peñon. Mark Hawksworth, our VP of exploration, was in charge of exploration that led to the discovery of the Mercedes deposit in Mexico. And on the Malartic on the Odyssey discovery at Malartic, when we were both at Yamana, he led the exploration on behalf of Yamana there. So the way we take this approach is we are really here to find a mine. We're not here to drill some good holes, run the stock up, and sell out and move on to the next thing. We like to consider ourselves as mine finders, and we've demonstrated our ability to do that in the past at El Peñon in Chile, at Mercedes in Mexico, Pilar in Brazil, and Malartic in Quebec. We are always cautious about how we portray our development path to the market because we want to make sure that what we say we deliver. That's our number one motto, and that's what the CEO of Meridian Gold, Brian Kennedy, taught us when we worked with them, was say what you're going to do and do what you say.
Right.
So we're working with the Forest Service right now. We submitted our notice of intent to the Forest Service to present a mine plan of operations on Doby George on December 1st of 2025. And as soon as we get that back from them, we're updating that Gantt chart to say this is already working with our partners and the people that will approve this project on a Gantt chart that we both say that we can achieve.
Right.
Because what I don't want to do is get one out there that says the Forest Service says we disagree with that.
It's a beautiful answer. I was going to ask you about your background. That was fantastic. You come from Yamana. I was a shareholder of Yamana. I always liked the company. But the one thing that gets me excited about a company like this, a development project,
Yep,
is basically a CEO that has a vision, of what they're going to accomplish, and then all they need is a plan and a team to carry out the vision. It's basically A, B, C, D, E kind of thing. Now, to do a Gantt chart, again, any development company can do a Gantt chart once they basically have a PEA
yep,
in place. From at that point, they can basically plan out the steps that are involved from going from a PEA to a construction decision. Anybody can do that. But the one thing that I've seen is you said, find a mine. So the hardest thing to do in this business is build a mine, but the second hardest thing to do is to find the mine. But once you find it, then you find a way to build it, but then you need the people to do it. So I use a system where I analyze development stocks where I basically check all the buckets. I have a checklist and I have like 7 items, and I look for development stories that check all the check boxes. And your company, the only one that you don't check right now, but you do check it, but you're not giving that guidance right, is a path to production. Now, John and I just got that story, and I like the path to production. I think the path to production is solid. But that's one thing that's missing from your company right now. Like I said, once you do the Gantt chart, once you start doing that, for instance, I've interviewed a lot of CEOs, and I go into a meeting with somebody, and when a CEO, if they have a plan and a vision, it just comes right off them. I just pick it right up and I start getting excited. And then I start looking for, okay, you got a fantastic plan, but do you have an economic project? What's the CapEx? What's the recovery rate? What's the permitting? I start looking for all the red flags, right? So even if you have vision and a plan, that's not good enough. You still have to check all the boxes. Your company checks all the boxes. It shouldn't be valued at $32 million. I feel like I'm stealing this company.
Steal away, Don. Steal away. But no, but
absolutely stealing. I mean, like I said earlier, I said you have 75 bagger plus potential. I mean, it's insane.
And I think you'd believe me, Don. I think you'd believe me when I say you do have a Gantt chart. But I do not want to share that Gantt chart publicly until I am communicated with the regulators who are going to supervise and ultimately permit this project so that we're aligned. What I find the worst thing that you can do now developing a project is not have full alignment between everybody involved in the project. That's community, regulators, company, and shareholders.
Right.
I don't want to get that horse, I don't want to get the cart in front of the horse at this point.
We're clear on that. I want to just have one final point about kind of retail investor and vision and basically showing people what you plan to do, what you're going to do. I've seen, when I see companies like this that are just crazy cheap, I have a conspiracy theory. I actually think, well, we're just going to keep it cheap so our friends can buy it.
That might be.
That's how I feel about your company here. It's like you don't want to tell anybody what you really got.
Yeah. Well, and the vision we have, and you talk about vision a lot, and we do have a vision. And our vision, like I said, our background coming from producing companies where we've been involved from the discovery to the development to the production, where we've been in that whole pipeline. I can tell you that our vision has always been get Doby George to permitting in a time frame that it will come on stream and generate cash flow when Gravel Creek is ready to be constructed. It's a natural, organic way to fund Gravel Creek in the future. And we've already thought, what is Gravel Creek? Well, you've seen it on that slide. Gravel Creek is going to be a 2,000 ton per day underground mine that's going to feed a flotation mill and potentially be trucking concentrate 25 miles down the road to Jarrett Canyon for processing. Now, why 2,000 tons per day at Gravel Creek? You've seen the deposit, and I will go back to this slide here.
Guys, we have to wrap it up. I'm really sorry, but we have to. We have like 1 minute before we have to wrap it. And I want to give Don an opportunity.
Yeah, I appreciate that, and I thank you for your time, John and Don. And Don, any final words?
Yeah, sure.
I'm out of time. Otherwise, I speak some more. I'll turn to John.
Don, maybe you can give us like just a 30-second summary of the opportunity here, and then we'll wrap it up.
Perfect. Yeah, you can stay on, Darcy, while I do this. I mean, this company checks all the boxes. I've seen these projects before. Like I said, I'm like a conspiracy theorist. It's almost like they don't want anybody to know what they got. But the one thing is, I want to mention this one thing about vision and strategy. One thing you have to see, the thing about me is I get really excited about, a 10 bagger or a 20 bagger. I get really excited about that, right?
Yeah.
And I want you to be excited about it too. In other words, instead of thinking when you're out here doing marketing for the public, yeah, it's okay to tell us the story of what you're going to do, A, B, C, and D. But what's even more important, and this is where CEOs don't like to go down, right? Because you get in trouble. We can't really talk about this, right? But what you really should be excited about is the potential of the company and evaluation from a valuation standpoint. If we build this thing, our shareholders are going to benefit in an amazing way. Now, I know it's hard, sometimes it's hard to talk out loud that way, but for me, that's the exciting part of your company is the valuation proposition here. I mean, the gold price doesn't even have to go up for you guys. If it just stays here at 4,500, it doesn't even have to go up.
I fully agree, Don. And the testament to how I feel about this company is in 2025, I purchased about 450,000 shares in the public market. Not equity issuances to the company, not options, 450,000 shares in the public market. I really believe in this thing because I've seen how they've developed in the past. And what I like about this project is where you see smoke, you see fire. We see so much smoke, and we've just started drilling this new discovery at Gravel Creek. There's smoke all around it. I know it's going to continue to grow.
Very good. I'm glad to have you on. Great story.
No. I enjoy the banter back and forth. That's great stuff. And like I said on the Gantt chart, really it comes down to I will not tell anybody what I can do unless I'm sure I can do it. And until the Forest Service gives me the green light and says, this is the schedule we got you on, I'm going to share that with everybody. And everybody can hold my feet to the fire and said, you're going to do this on this date. Now do it.
That's great. Well, we look forward to that in a few weeks' time. And we appreciate you coming on, Darcy. Again, this has been Western Exploration, WEX in Canada, WEXPF in the States. Don, thanks for your analysis and comments, and we'll leave it there. But we hope to see you at our conference in May, Darcy. I know that you're going to be attending one of our two conferences in the U.S. We appreciate that. And I think by then the stock will be considerably higher given your comments today and gold's ascent. So
I hope so. And I'll be the guy at the conference with the Gantt chart on my T-shirt.
You can make a T-shirt out of it.
Yeah, there you go. Thanks, gentlemen. I really appreciate the opportunity to speak with you and your listeners.
Thank you.
Our pleasure. Thank you.